everyone. Thank you so much for joining us today. Before we kick this off, I do want to point out to the audience that we welcome questions. So during today's presentation, if you have a question, please post it in the Q&A section at the bottom of your screen, and we will address those questions after the presentation. So I'd now like to turn this over to Stephen Saltzstein, Force Family Office's CEO.
Thank you, Callie. And thank you, everyone, for joining us today. We really appreciate you taking time out of your day to be with us. We have a super interesting webinar for you featuring IQSTEL. You know, these gentlemen, this management team, they are self-made. They had the idea that the largest carriers in the world, be it Verizon or Deutsche Telecom or AT&T, you know, needed help with international routing international traffic. They basically, you know, started this business from nothing and have built it. They're over a $400 million run rate, and you know their goal is to get to $1 billion. And just to give you a sense, like they were begged by the NASDAQ to uplist from the OTC. It wasn't like they approached the OTC. The NASDAQ approached them and said, please, we want you to come list. And they did it by themselves. So it's such a fantastic story. There is so much promise here. It is my great pleasure to welcome Leandro Iglesias and Álvaro Quintana, management team of IQSTEL. Gentlemen, the floor is yours.
Thank you. Thank you. Thank you very much, Stephen. Thank you very much for the opportunity. Welcome, and thank you for attending to this presentation. The way that we present our company is like a global connectivity, AI, and digital corporation. And our vision always has been to be global. So we founded this corporation in order to offer to the large telecommunications company the solution to grow and expand their coverage, international reach in the more cost-efficient way. So we have been building this connectivity in a global reach. And after that, right now, we are start offering and delivering high-tech, high-value services like telecommunication, fintech, AI, and cybersecurity. And, you know, I think that it's important that for 10 years, we operate this corporation as a private held company. So this has been, you know, we start this from scratch, from zero revenue. And we, over that period that we were a private health company, we developed our strengths and our process and our knowledge of the market and prepare us to the process that started in 2018 when IQSTEL born as in the OTC markets. Álvaro, please.
Yes, as Leandro was mentioning, we founded the company in 2008, and we can divide the history of IQSTEL in two parts. The first part is from 2008 to 2018, the first 10 years of operation when we were a private company where Leandro and I were the main shareholders. And we took the company from 0 to $13 million in revenue and 150 active interconnections with the major carrier companies around the world. In 2018, we decided to test the open markets, and we did a reverse merge with an OTC pink company. In 3 years, from 2018 to 2021, we got our securities designated as to be traded in the OTCQX market. And in that time, we were approached, as Stephen was telling you, we were approached by NASDAQ. They contacted us directly and offered us all their support to uplist the company to NASDAQ. So since September 2001, we were working together with a NASDAQ analyst, preparing the company to be uplisted to NASDAQ, and we finally did it last month of May, and we did it by a direct listing, no banking, not any bank supporting us on that process. We did a direct listing into NASDAQ. And I could say that the other part of our history is from 2018 to the present time, the last 7 years, where we has been being traded in the public market. And we in that time we completed 12 ventures and acquisitions, adding fintech, cybersecurity, and proprietary AI services. We extended our telecommunications portfolio. We, from 150 active interconnections, we are currently running more than 600 active interconnections, and our revenue went from $13 million in 2008 to more than $340 million this year. All the companies that we have acquired has been carefully selected to ensure that we enrich our product and services, that we extend our global coverage, and that we strengthen our customers' relationships.
Very well. Thank you, Álvaro. We are a global trust corporation. We combine a unique mix of telecommunication services, fintech services, our proprietary AI services, and cybersecurity. We have 6 offices around the world. We have more than 100 employees. We cover 17 time zones. Just to giving you an idea of our global operations, as Álvaro commented, we have like 600 network interconnections around the world. We're offering international voice services, SMS services, and connectivity services. To put an idea, we're covering right now 4 continents, more than 20 countries, and we manage more than 5 billion minutes per year and more than 20 billion of SMS per year. I love this slide because this slide gives us, like a very simple, what is our power? Our power is over all those years, we have built a very robust business platform with over 600 of the largest telecom operators around the world that allow us to sell high-tech and high-margin products. What is our reach? We can reach around 2.7 billion users through our customers. What is the value of our company? The business platform that we have built is very difficult to replicate. We have been invested 17 years building this, and we already complete the hardest part, that is getting into the customer, approved by the vendor, connect with the network interconnection. For any company, just doing this is a journey that takes years, and we are proud to say that we are already there. And what is our vision? With this business platform, with this strong business platform, is to become this company in a $1 billion revenue by 2027. Of course, in this process, we are going to discuss how can we achieve our sustainable profitability and innovate high technical solutions. This is a slide, I will talk a little bit about this. This is just a slide about our largest telecom customers. That are the companies that they trust in us, and we are doing millions of dollars in business per year with them. Let's review some names. Verizon. T-Systems, this is a subsidiary of Deutsche Telekom. T-Mobile, Vodafone, Orange, Digicel, Tigo, China Mobile, Telefónica España, Telecom Italy, Cable and Wireless, Korea Telecom, Tur Telecom, Omantel, PCC Global, Intel, it's MTN, Belgacom, it's amazing companies that is, as I say, we have been building this for 17 years, and this is a real asset because we are doing business with them, they trust in us, And this is what we are taking advantage for offering them more than telecom services as fintech services, AI services, and we are starting to offering them cybersecurity services too. What is our value proposition? Our value proposition is to becoming in one-stop shopping that offering all these telecommunication, fintech, AI services, and cybersecurity. This is really unique. When you analyze in some companies around us, this value proposition is unique. So we have divided the company like in 3 business divisions. The first one is the telecom division that is representing nowadays. We offering here voice and SMS and DIDs, eSIM roaming services and international fiber optic. We around the 80% of our revenues here. The fintech services, when we have offering a MasterCard debit card, international top-up, gift cards, and the AI and digital services when we are offering AI services and cybersecurity. Álvaro, talk a little bit about
yes.
this growth.
We have already mentioned some of these figures. This is how our revenue has been increasing year after year through organic growth as well as through the acquisition that we have done during the last 7 years. So in 2018, we were at $13.8 million revenue, and our revenue run rate as today is more than $400 million. 80% of that revenue is coming from telecom services and 20% is coming from fintech services.
I think something important to remark here, Álvaro, that we were talking with Steve just before I start this presentation. Just for example, of course, we have been acquiring some companies, but for us it's very important the organic growth. For instance, last year in 2024, almost the third part of our revenue was organically. So that's really important. So we have created a unique mix of acquisition and accelerate the organic growth with those acquisitions, adding program services, adding commercial reach, and adding footprint and business relations, of course. This is a graph that represents our story about all the acquisition that we started. We started in 2018 with ETELIX, that was the company that we founded in 2008, and how over the years we have been acquiring companies and in this process. This is sometimes when we has given this presentation, asking me about the explanation for each subsidiary. I will explain very simple, but every single subsidiary that we acquire, for instance, QXTEL giving us the global services, SWISSLINK giving us the European market, SMARTBIZ is specialized in Latin America, WHISL in the United States. So every single company that we have been acquired has been adding services, having the knowledge of a specific market and the business relations in some cases.
Where we stand. These figures are based on our last Q file for the 9 months ended September 30. So our revenue in the third quarter this year was $102 million, which represents a growth of 42% comparing quarter over quarter. Our accumulated revenue for the 9 months of the first 9 months of this year is $232 million, which represents a growth of 26% comparing the same period of year 2024 versus 2025. The adjusted EBITDA, combining the telecom business and the fintech business, is $683,000 in the third quarter. Our revenue run rate is, as I mentioned before, is about $400 million a year, The adjusted EBITDA run rate is $2.7 million. We have assets a little bit above $40 million, which represent $12.23 per share, per issue share. Our net shareholders' equity is about $17 million, which is equivalent to $4.66 per share. With outstanding shares as of September 30, a little bit over below 4 million shares, issue shares. And we are in track to achieve our full year revenue forecasted that is $340 million for this year. Very important things to remark is that we have no dilutive debt, we have no convertible notes in the company, and we have no warrants outstanding. I think that's very unique in a company like us.
Thank you, Álvaro. Where we go? Well, we plan go from $2.7 million EBITDA to $15 million adjusted EBITDA in 2026. So we are planning to go from $400 million to $1 billion run rate in 2027. For this, we are planning to complete 2 acquisitions. For us, one of them is to increase our presence in Africa, and this acquisition is going to add like 8 countries of presence in Africa, and of course positive EBITDA, and a really important revenue stream. And also we are pursuing another company in digital services. In both cases, we already have a non-binding MOU signed, and we are in the final negotiation to move into a binding MOUs and complete the acquisitions. So our market cap is less than 20 million nowadays. And when you analyze some companies that are in our arena are trading something between 10 and 20x EBITDA. So we believe that in the process that we start to showing how our EBITDA is going to increase, we are going to start close this gap between some companies, the valuation that our company has, and some companies that are in our arena have. And if I can say a simple sentence where we are, I love this sentence. We are transitioning from a phase of heavy investment to a phase of accelerating profit. So we have been gaining critical mass in this process. We already, our business model is proven. We are with EBITDA, positive EBITDA. So right now we are every single revenue that we put on our company, goes bottom line to increasing the EBITDA. So we're in this process to accelerate the EBITDA of the company, thanks because our business is really scalable. Why we are different? We built this company from scratch, and we have 17 years of a success story. Every single year we met all our forecasts, all our projections. Something very unique here is that Álvaro and I, we control the company through preferred shares. We got listed in NASDAQ by ourselves, by direct listing. As Álvaro commented, our first contact was NASDAQ sent us an email in September 2021. And from that point, we start to, by ourselves, we haven't used an investment bank. We have been in this process, meeting all the requirements. We do all of our SEC filings by our own. We never file late an SEC filing in more than 7 years. We have prepared successful qualification of registration, 2 Reg As and 3 S1s. And, we believe that we have a very unique mix between, the global reach that we have, the explosive growth that we have, high-tech solution, and AI. And we only have 4 million outstanding shares.
Yes, we would like to mention that Litchfield Hills Research performed a full due diligence in our company a couple of months ago. They visited our offices, talking with several of our executives, watching our business platform, talking with our network operations center. They also contacted some of our customers, and they came out with a report that suggests a strong buy signal, and is $18 per share as a target price for our company. We can share with you the report if you are interested in getting more details on that.
Thank you.